We've also seen, perhaps at a more micro level, some sort of censorship also coming from these payment networks, where we've seen that they've stopped payments going to places like WikiLeaks or Pornhub or InfoWars. Now, should we as citizens be concerned about, as you're mentioning, this increased amount of power that is now wielded by the payment companies and by the big technology companies?
I think possibly yes. I think it is difficult. So if we go back to the purpose of money and payments, it's a public good. It's the system that allows you to buy whatever you need to buy in Denmark. It allows society to function. And if the operators of that infrastructure prevent you from doing something that's legitimate in Denmark, so you have something standing in front of your democratic choice, I think that does start, and there are no alternatives, then that is problematic, I think.
Yeah.
Now, I think there's degrees to which discrimination laws would protect certain things. So I think it would be impossible for, say, a religion to be disallowed. You could see that particular charities could be taken off because of different political views by the operators. You could also see some of the operators coming under political pressure in their home jurisdictions about doing certain things and stopping them. And because it's such a it tends so much to monopoly payments, it is, again, and technology obviously adds to that force. It is something that I think policymakers are going to have to resolve for. When it's difficult to make, at the moment it's difficult to see how they could oblige someone to serve the sex trade. But on the other hand, if the sex trade is allowed to exist in your nation, then it needs to be able to pay and be paid. So there will have to be some kind of answer to that question.
So, Natasha, it's such a great pleasure to meet you. Thank you so much for taking time to speak to us today.
Not at all. Thank you. Real pleasure to be here and speaking with you, Chris.
All right. So let's just get started. Please, before we get into the conversation, tell us a little bit about you. Tell us who you are and what you do.
So I'm Natasha de Terán, co-author of The Payoff, How Changing the Way We Pay Changes Everything, which is a book that published last year. I don't know if you can see it. But I'm a sort of observer, commentator, itinerant of the financial markets. I started working in the derivatives and repo and bond markets. I then moved into journalism, financial journalism, and wrote and learnt lots in doing so about the financial markets. And then I've been working in the policy area for about the last 10 years.
All right. Well, so we're going to be basing most of our conversation today on the fascinating book that you wrote, The Payoff, which I have to say I really thoroughly enjoyed reading it, and I learned so much from it. The first question that I have, which is something that before reading the book I would have thought, well, this is just a very obvious question, but I found that it's actually far more complex than I thought. So tell us, what is a payment?
Well, payment is basically a discharge of debts, debts that you may be incurring into the future. In other words, you're paying for the debt to realise a product or a service in the future. But it's a very personal thing. It's very interesting because you and I may have a debt, and we can choose how we discharge that and what we discharge that with. So you may accept pounds and you may accept them by bank transfer, but you're in Denmark, so you probably wouldn't accept pounds. But you might accept a bank transfer. So you and I can individually decide what we accept and how we exchange. But we're informed by the world around us. And you don't want my pounds because you're in Copenhagen, and being in Copenhagen shapes both what you'll accept and how you'll accept it.
Why should let's say the average person that just has maybe a couple of credit cards, a debit card, and a bank account care about payment? What perhaps are the main problems in payments that still have not been solved through technology that the average consumer should care about?
Well, what? Just starting with the first question, why should they care about payments? Well, first, I mean, they're fascinating, but they're also really important because if this person cares about money, and they might not, care about money in an end in itself, and most of us probably don't. But if we don't care about money as an end in itself, the reason that we want money and that we have money and that we use money is to pay. And I would argue, and I think we argue in the book, that payments, it is in payments that we all, rich or poor, have a shared interest in money. And payments are the social construct that allow us to, buy things from each other, exchange value, buy food and so forth. So the greatest shared social purpose of money is, in my view, payments. And what hasn't technology solved for? Well, I mean, payments are many things. That technology is one of them, customs another, but they're also power, and they're also local. So going back to my sending you pounds, the way that I can send them to you relies on not only on the UK payments infrastructure, but also the Danish one, and how well they communicate with each other. And as we know, in cross-border payments, they don't necessarily communicate with each other very well. But part of the reason for that is that mostly we're paying in country, so there's less demand for cross-border payments. I think the Nordic area is slightly different in that because you're very integrated economically.
Right. Okay. Now let's. I want to touch base on financial inclusion because we hear nowadays that the new types of money that we're seeing popping up everywhere will solve the issue of financial inclusion. And in your book, you talk about a duality between financial inclusion versus financial exclusion. Now, can you tell us a little bit more about this whole idea of financial inclusion versus exclusion, and whether we should actually buy into the whole idea that digital money like CBDCs or cryptos or even DM would actually improve financial inclusion?
On the face of it, digital payments are safer than cash. So if you've hitherto been earning in cash and spending in cash and saving in cash, there are a lot of risks to that. You can lose your money, it can get stolen, get burnt, perish, and because of all of those things, being cash to bank, operating in a purely cash subsistence sort of way, discourages you from saving. You don't earn interest on your money. There can be devaluations, and they can get stolen. Your money can get stolen. So, moving those people who had previously been operating solely in cash, with all the restrictions that involves, because it also limits your economic sphere of operation. You can't, you can't buy things on the internet with cash. You can't, buy things from another city or another town without actually physically going there. So it increases your costs. So to that extent, moving to digital forms of payment and savings vehicles is a positive. But that said, you need to be enabled in that digital world. So you need to have the equipment that would allow you to do so. In some cases, a smartphone. In some cases, a very basic mobile phone in Kenya, for instance. But you need the internet access, and then you need to be, savvy enough to use these instruments, which can be very basic, but they can also be quite sophisticated. And I think what I find fascinating is we've seen in Kenya with M-Pesa that an entire population has moved into digital payment very, very quickly. And it's been transformative in terms of inclusion in inverted commas, and I think this digital payment entry point can then lead on to savings and credits and so on and so forth, and that's very useful. But in countries like the UK, where you have very sophisticated digital payment and banking offerings, what you're also seeing is people being excluded because you might need a smartphone, you might need to really understand things, to be conversant with that sort of technology. and have broadband access as well. So it's not a one-way street. And in some pockets where you'd expect this to deliver just solely net benefits, it's not necessarily at the moment. Now then to crypto and financial inclusion. I think we have to be sceptical on this one, Chris. I think we have to be sceptical on this one. But it's interesting to be speaking from the UK to the Nordics, and you're in Denmark, and you're not in the Eurozone, I don't think, and we in the UK were not in, and still are not in the Eurozone, and we have a national money. And there's many reasons that our countries chose to go down that route, but we're tied to our money. Now we don't choose that necessarily, but we choose to live in our countries and to abide by the norms and customs in those countries. Now, if you and a group of other affluent fintech persons in Denmark started to operate with a new cryptocurrency that worked very well for you, and for other, let's say, financially sophisticated people in Denmark, you could end up with a divided population. So this shared social good, which is the krona, is no longer a shared social good. There's a two-tier kind of payments economy, and that's inefficient. The reason that we have national currencies is to allow seamless value transfer across our nations, without the frictions of exchange, without the costs of exchange, without delays. So the idea of moving to private forms of money, I think, is problematic if we don't have regulation in place that ensures exchangeability and so forth. And then to the idea that a currency like DM or some of the stable coins, so called, that we're seeing touted for financial inclusion, well, there what we're seeing is a proposition that a synthetic dollar be used to support populations in precarious regions, shall we say? So there, you're putting reliance of individuals outside the country. Now, if one imagined a very dangerous regime somewhere, one would think, well, it's enfranchising for the population to move away from, to be free of their rulers, and one could see that as being reasonably attractive. But that's not always the cases that they're talking about, and I don't think we'd be thinking it's a great idea for starving Haiti to be at the mercy of a private company who can devalue its cryptocurrency when it feels like it, which could go bust. So they wouldn't just be taking, if one was to use one of these cryptocurrencies for disbursements, which many of them are encouraging, for charity disbursements and relief disbursements, you're creating a false economy, but also you're giving these people new risk. However bad the local currency may be, it's the one that they're buying bread in, and it's the one the economy operates on. And asking them to take on a currency risk and then also a credit risk of the private issue of that stablecoin, I think is pretty suboptimal.
Right. Okay. Let's move on to the next question, and this is related to some of the innovation that we have seen in the payment space, because we've seen a lot of innovation, especially coming out of Europe and the Nordics. And what I found really interesting was trying to understand how some of these innovations, specifically in the shape of reward cards, how they actually work. Can you explain and elaborate a little bit on that for us?
Well, there's a lot of money in the interchange. So the interchange is the fee that's levied on merchants when we use cards. Mm-hmm. So at the moment, in most places in Western Europe and in the US, that is where the bulk of income from payments comes from, and that supports the payments business. The networks, the cards, all of these things. And we, as consumers, we don't see those costs. Particularly in Europe, we don't see them. So we don't see a difference between the cost of our paying in cash versus us paying with a credit card or a debit card. But there are differences in those costs to the merchants. And in order to encourage us to use our cards, in particular credit cards, there are these so-called reward schemes that seem great to us as consumers. But what they're really doing is locking us in. So much as you're locked into the Danish kroner and I'm locked into the British pound, the cards schemes like to lock us into them, and hence they give us rewards. Now we pay for those through the surcharges effectively that the merchants are baking into their prices. Sometimes we actually pay for a particular card. There could be an annual fee or so forth. But they're all basically trying to lock us in. And payments is a it's a network business. It's a business in which we are locked in. We start to be locked into our currencies, and then into being in Denmark, you're locked into the systems that are accepted in Denmark, be they card-based or account-based or otherwise. But are these rewards free? No, there is nothing free. There's no such thing as a free lunch, as we say in the book.
Yeah, I think that's really interesting, because as a consumer, we very seldomly actually think about the enormous amount of infrastructure that needs to be maintained behind that for it to be able to process our payments.
Indeed. Yeah.
I want to pick up on something that you mentioned just a little while ago, and you were talking about M-Pesa and Kenya, and how some of these economies have been able to really leapfrog the whole 40 years of technological development in the West, and really come up with fascinatingly innovative solutions. Do you think that same process of leapfrogging that happened in payments can be applied to other financial products like loans and maybe even mortgages in a similar pattern in some of these developing economies?
Oof. I think there's in many areas there's a long way to go. I don't know that those things will be reinvented in the same way that really payments were reinvented in Kenya with M-Pesa. But I think the use of data, payments data, to enable micro lending or other forms of lending could be stimulated in a way that would have been unthinkable without those payment platforms and without the richness of data. But that there's a two-way street with that, because if you see my payment data, it might encourage you to give me a loan, or it might discourage you from giving me a loan. Right. And I find it fascinating to hear some of the profiling thinking that people are talking about. That if you by looking at your spending habits, they can see that you're buying a lot of premium products, therefore you're a good person to lend to. Well, it doesn't follow in my logic that because I spend money on expensive things, I'm a good person to lend to. It might make me a bad person to lend to. Right. Depends whether I can afford it. So I think there's only so much you can gather from outgoing payments information. I think incoming payment information from a business, if you're looking to lend to a business, then I think we could see some really interesting things happen. And I mean, I take buy now, pay later. I think buy now, pay later in the business sector could be really interesting, a sort of digitized factoring. So I think that's something that we may see come on board, not only in some of those economies, but also in Europe and elsewhere.
Now let's talk about a subject that is a bit sensitive and that we've heard a lot about recently, especially since the invasion of Ukraine, and this is the topic of sanctions. Yeah. Now we've heard about that there was a lot of pressure to remove Russia from the SWIFT network as part of the sanctions. Now, and the question I have for you is, should we be concerned that the control of the payment networks could effectively be used to bring otherwise sovereign nations to their knees?
Well, yes, but that was always the case, wasn't it? I think what's different now is how much power there is in the hand of private companies. And of course, small countries like the UK and Nordic countries, we're necessarily dependent on foreign providers. And I think in much the same way that there's national discourse about which carriers should or which infrastructure builds you should have, and from which companies, and where are they from. I think some of this has to be transported. This thinking has to be considered in payments. Now, clearly, a lot of the big payments infrastructure providers in Europe today are American, and by and large, that's probably not a problem. But there have been times when Europe and the US have had different thinking about things. I mean, Cuba is obviously one example. There has been a divorce in thinking over time about Iran, and that can mean that whatever a European bank or person or company wants to do, they may not be able to do because of US sanctions and US rules and so forth. And I mean, certainly this commission, as in the European Commission, very much had this at the forefront of its thinking when it came in, and there was a lot of discussion about strategic autonomy, and payments were very much within that thinking. How much that has changed, obviously we've seen much more geopolitical alignment between the US and Europe in the wake of the Russia-Ukraine situation. So that thinking may be slightly less front of mind. But when we're thinking about the dependency, it's not, we don't need to think only about, let's say, PayPal, or Visa and MasterCard, the names that we know and love or know and hate, but the pipes deep behind are equally important. So it's a deep supply chain plumbing question. But yes, I think as any teenager dependent on their parents' purse strings will remind you, payments are a form of power. But I think we also have to, if we just stand back from the pipes themselves and the money itself, and we're all deeply economically entangled with each other. And even American IT companies are deeply entangled with Chinese supply chains, and production, the chip business is very messy. So if we try to look at everything involved in a payment, we would find there's a bit of America, there's a bit of Europe, there's a bit of China going on. And if you wanted to completely nationalize, I think you'd be back to cash. And even cash, scale economies have meant that most note printing is done by only a handful of companies anyway. So one would have to resurrect a note builder. But I think post this current situation, I think there will be a lot more thinking across the board in where we're getting all sorts of things from, whether it's solar panels or telecoms equipment or chips or the raw materials that are going into our technologies. All of these things will be thought about, whether they could be resolved in a way that politically aligned nations can remain completely independent of those they're not aligned with. I'm not sure.
And I guess we've also seen, perhaps at a more micro level, some sort of censorship also coming from these payment networks, where we've seen that they've stopped payments going to places like WikiLeaks or Pornhub or InfoWars. Now, should we as citizens be concerned about, as you're mentioning, this increased amount of power that is now wielded by the payment companies and by the big technology companies?
I think possibly yes. I think it is difficult. So if we go back to the purpose of money and payments, it's a public good. It's the system that allows you to buy whatever you need to buy in Denmark. It allows society to function. And if the operators of that infrastructure prevent you from doing something that's legitimate in Denmark, so you have something standing in front of your democratic choice, I think that does start, and there are no alternatives. Then that starts to become, that is problematic, I think.
Yeah.
Now, I think there's degrees to which discrimination laws would protect certain things. So I think it would be impossible for, say, a religion to be disallowed. But you could imagine a very extremist sort of. You could see that particular charities could be taken off because of different political views by the operators. You could also see some of the operators coming under political pressure in their home jurisdictions about doing certain things and stopping them. And because it's such a, it tends so much to monopoly payments. It is, again, and technology obviously adds to that force. It is something that I think policymakers are going to have to resolve for. I mean, it's difficult to make, at the moment, it's difficult to see how they could oblige someone to serve the sex trade. But on the other hand, if the sex trade is allowed to exist in your nation, then it needs to be able to pay and be paid. So there will have to be some kind of answer to that question.
Yes, indeed. I think that presents quite a complex dilemma to be sorted out, and we're going to be talking a little bit more about the use of technology for that in some of the further questions that we have, and also with regards to programmable money. But for now, let me just ask you. In the book, you mentioned that unlike Asia and the US, payments in Europe are subject to a number of caps and regulations that basically limit the amount of fees that they can charge. We've also seen that there's almost like a race to the bottom when it comes to fees, especially when new companies are coming in with very, very low maintenance infrastructures that allow them to reduce their operating costs. So the question I have for you is, where is the revenue in operating a payment company in Europe? And how can payment companies in Europe remain profitable?
Well, I think by and large, most of them at the moment are interchange revenue, even though the interchange fees in Europe are considerably lower than they are in the United States. Mm-hmm. Is that enough for them to survive? I think probably not in the longer term. I mean, a lot of the the fintech's infrastructure costs. Their infrastructure is much newer, much cheaper to maintain. They're much lighter. They have much lighter footprints, lower staffing costs, all these sort of things, and less regulatory cost and so forth. That's true, but I think the interchange fees will come under new pressure in Europe. I don't think that's in question. So I think they will go down. We're currently in an inflationary environment. Which has got all the tensions it has got, but it's meaning that money for fintechs is harder to come by. They're under more pressure to deliver or to reach profitability or positive revenue. We're probably doing less discretionary spending as consumers. We might be spending more just because things cost more, but we're going to have less money. So a lot of the assumptions that they've grown up with, so very low interest rates, easy money, tidal waves of VC funding, a lot of discretionary spending. These are not givens anymore. So we look to banks and say, well, how do banks make their money? They make money on the interchange, and they make money on supplying credit as well. So you could say, well, the fintechs could start supplying credit. Well, only if they've got balances to lend out. Yeah. And I think one of the perverse things, well, not perverse things, but when I look at fintechs, I mean, I'm sort of 50 odd, and they don't naturally appeal to me. I might use them. I use several, but their marketing is not directed at people like me, and it's certainly not directed at people like my father. It's generally directed at the sort of 20-year-old sort of demographic. And now banking's always targeted that demographic on the presumption that you get customers young and keep them for life. But they've got customers young, and lent the older generation's balances out to the younger customers and made money on the spreads. But if you're a fintech and you don't have the older people's balances, you can't lend out to the younger ones. And it's credit that does fuel a lot of the payments revenue. It's as simple as that. So I think it's going to be quite difficult for them. I think one thing to touch on, I suppose, in this is, it used to be that when we took the tube or the bus, or we bought a newspaper or a coffee, we dug into our purses or our pockets and we dug out change and we paid for them. And now we're doing the smallest payments by cards.
Yeah.
And of course that is revenue. So that helps. The fact, the more that we use our cards, the better for everyone in that industry. Not necessarily better for the merchant, but better for everyone in that industry. But is that enough to keep standalone businesses going in the new environment? I'm not sure.
Let's talk now a little bit about cryptocurrencies. We haven't seen crypto adopted as a mechanism for payment, and that's because of the volatility and because of a number of additional things. But do you think that eventually cryptocurrencies will constitute a form of payment, or what would need to happen for people to actually gain trust in using them as an exchange mechanism?
Well, I'm quite negative on crypto, I have to say, cryptocurrencies. So if I operated in illicit businesses, I would be quite happy to deal in crypto, because I could get away from the strictures or I could hope to get away from the strictures of the financial policeman and bank checks and all that sort of thing. And on the dark web, these cryptos are used very widely. So I think that they are used quite a lot for payments, but just not for good stuff. Also, if I lived in a country with a very, very volatile and untrustworthy currency, and a government that might inflate its way out of problems at any given point, then a cryptocurrency might seem a good bet. The dollar might also seem quite a good bet. And if you ask me which one I would go for, I think I'd probably go for the dollar were I in that situation, rather than the additional excitement of crypto rides and the expenses of getting in and getting out. But when we look at the problems that there are in payments, so the frictions, the costs, and so forth, mostly they relate to exchange across currency, across borders and currencies, and very often there's the same thing. Introducing another asset into our krona pound exchange means that we're paying twice the amount for exchanging value. Once into the crypto asset and then once back. Now, if you lived in a pure crypto world, you've given up the krona, and I crossed into crypto and you kept the crypto and spent it, then yes, but then it begs the question why you've moved into crypto in the first place, given that you're not in a country with a very volatile currency and about to inflate its way out of problems. So I don't see that. But also, if we go back to this, the national sort of question, you may not agree with everything the Danish government does, and there'll be lots of different political views and religious views in Denmark and different interests and so on and so forth, but you are part of that community, and you sort of know what it is. Now, to give that up to move into another community, currency community, and the idea that this would be a great big world currency community that you're happy to vest your trust in. Mm-hmm. To me, it's sort of quite far-fetched that there would be this global universe of trust that we've failed to create in the real world. Yeah. I don't see that moving into a virtual world makes that any more possible. I think you could sort of get little factions of currencies. I think in the wholesale markets, I think it's a slightly different question, but I think at the retail level, I do not see a future for cryptocurrencies, private cryptocurrencies.
Okay, that's an interesting perspective.
As payment instruments, as speculative investment vehicles, yes.
Yeah. And what about CBDCs? Because we know that a lot of countries are either rolling out their own CBDC or they're considering doing so. We've also heard the Bank of International Settlements saying that anything that crypto can do, CBDCs can do better. So the question is more geared towards, we know that CBDCs can be programmable, and we've seen some instances of them being used for limiting the amount of currency that you can actually spend on a particular item, or having expiry dates. Should we in the West, and specifically in Europe, should we be concerned about the potential rollout of CBDCs, given the potential they have to limit the way in which money is used?
Well, would you rather the Danish government did it, or a private foreign company limited what you could spend your money on?
Is there another option, like not having it limited at all?
That's cash. And I think the CBDC discussion is a really interesting one, because it focuses the mind, and it should be focusing the general public's mind on deciding what to do. And I think the decision to do a CBDC or not to do a CBDC, and how to do a CBDC, it touches on so many issues. I think it's a decisions that the general public and the body politic needs to be properly engaged with, because it does raise so many questions. But it also brings to the forefront these questions about the power of private companies, about where your country thinks the balance should lie in terms of profit versus social good, public versus private. Where are the borders on, where do you want to draw the lines on these things? But in having that discussion, I think it's really important to remember that we're not looking at today's landscape and saying, well, everything works very well, we don't need to change anything. I mean, payments always work very well for the moment, because they have to. Even in the Irish banking crisis, when all the banks were shut, payments managed to work. Yeah. You find a way for payments to work. But the future is going to look very different to today, and it will look undoubtedly it'll look much more digital, and maybe we will want some, we will be transferring value tokens, and maybe you do need a public representation of money in that in digital form to ensure that. It was very interesting. I had someone from the ECB speaking last week, and he raised something which is blindingly obvious, but I hadn't really thought about it, was that in a very digital future, if there wasn't a digital euro, there would be no representation of the euro itself. And of course, when you've got 19 countries tied together by a currency, that might start to be more important than you might think in Denmark, where you're all familiar with what it is that you're transacting in. Yeah. So that was a slightly sort of different interpretation on it, on one of the reasons for having one, I thought.
Yeah, indeed. So let's just to finish our conversation today, what do you expect the future to look like when it comes to payments? So let's say, what would payments look like by 2030? In terms of currencies, in terms of the availability of crypto and technology?
I think crypto will still be around. I think it will be much more regulated. I think we'll probably have crypto, which will be used for whatever it's used for. I think we'll have stable coins, but properly regulated stable coins. I think an economic model that works for you and me as consumers and private companies as issuers has yet to be defined. And I think some of the euphoria that we have seen in that area from private operators and entrants, there shouldn't be that much money in payments, basically, because we don't want to pay that much to pay. And payments are in effect it's a public good. It doesn't mean you can't make private profit, but you shouldn't be either exposing people to huge amounts of risk or making huge profits, because in both of those cases something's going wrong. But I think we will see both of them, and I think that there could be good reasons for them. They could have a lot of logic, and once they're there, we might do all sorts of things that we can't even conceive of doing today. So, and your question to ask me to look into the future is such a difficult one. I mean, I can remember sitting in a room in about 2010 and someone bringing out a fairly rudimentary iPhone saying, we're going to do all our banking on these. And the room full of people, and we were all in payment, said, no, that's not going to happen. And, where are we today?
Yeah.
But I think we could be doing a lot, certainly payments will have evolved enormously, and there's so much competition, there's so much investment going on in payments, that I would hope there will be huge amounts of innovation that will create all sorts of new business and commercial opportunities that we can't even think of today.
Right. Well, with that, Natasha, thank you so much for taking the time to speak to us. I think it's been a really, really interesting conversation. You have an enormous amount of knowledge and insights, which of course can all be accessed directly through your book, The Payoff. So thank you very much for taking time to speak to us. I'm sure we, at least from my perspective, I would have a ton more questions to talk to you about. So I hope that we have an opportunity to talk again in the future. So thanks so much.
I hope so. Thank you, Chris.